Random House Audio presents The Quants, How a New Breed of Math Whizzes Conquered Wall Street and Nearly Destroyed It, by Scott Patterson. Read for you by Mike Chamberlain. All in. Peter Muller stepped into the posh Versailles room of the century-old St. Regis Hotel in Midtown Manhattan and took in the glittering scene in a glance. It wasn't the trio of cut-glass chandeliers hung from a gilt-laden ceiling that caught his attention, nor the pair of antique floor-to-ceiling mirrors to his left, nor the guests' svelte Armani suits and gem-studded dresses. Something else in the air made him smile, the smell of money, and the sweet perfume of something he loved even more, pure, unbridled, testosterone-fueled competition. It was intoxicating, and it was all around him, from the rich fizz of a fresh bottle of champagne popping open to the knowing nods and winks of his friends as he moved into a room that was a virtual murderer's row of top-flight bankers and hedge fund managers, the richest in the world. His people. It was March 8th, 2006, and the Wall Street Poker Night tournament was about to begin. More than 100 well-heeled players milled about the room, elite traders and button-down deal-makers by day, gambling enthusiasts by night. The small private affair was a gathering of a select group of wealthy and brilliant individuals who had, through sheer brainpower and a healthy dose of daring, become the new tycoons of Wall Street. This high-finance au monde, perhaps Muller most of all, was so secretive that few people outside the room had ever heard their names. And yet, behind the scenes, their decisions controlled the ebb and flow of billions of dollars coursing through the global financial system every day. Mixed in with the crowd were professional poker players such as T.J. Cloutier, winner of 60 major tournaments, and Clonnie Gowan, a blonde Texan bombshell with the face of a fashion model and the body of a Playboy pinup. More important to the gathering crowd, Gowan was one of the most successful female poker players in the country. Muller, tan, fit, and at 42 looking a decade younger than his age, a wiry Pat Boone in his prime, radiated the relaxed cool of a man accustomed to victory. He waved across the room to Jim Simons, billionaire math genius and founder of the most successful hedge fund on the planet, Renaissance Technologies. Simons, a balding, white-bearded wizard of quantitative investing, winked back as he continued chatting with the circle of admirers hovering around him. The previous year, Simons had pocketed $1.5 billion in hedge fund fees, at the time the biggest one-year paycheck ever earned by a hedge fund manager. His elite team of traders, hidden away in a small enclave on Long Island, marshaled the most mind-bending advances in science and mathematics, from quantum physics to artificial intelligence to voice recognition technology, to wring billions in profits from the market. Simons was the rare investor who could make Muller feel jaw-clenchingly jealous. The two had known each other since the early 1990s, when Muller briefly considered joining Renaissance before starting his own quantitative hedge fund inside Morgan Stanley, the giant New York investment bank. Muller's elite trading group, which he called process-driven trading, was so secretive that even most employees at Morgan weren't aware of its existence. Yet over the previous decade, the group, composed of only about 50 people, had racked up a track record that could go toe-to-toe with the best investment outfits on Wall Street, cranking out $6 billion in gains for Morgan. Muller and Simons were giants among an unusual breed of investors known as Quants. They used brain-twisting math and superpowered computers to pluck billions in fleeting dollars out of the market. By the early 2000s, such tech-savvy investors had come to dominate Wall Street, helped by theoretical breakthroughs in the application of mathematics to financial markets, advances that had earned their discoverers several shelves of Nobel Prizes. The Quants applied those same breakthroughs to the highly practical, massively profitable practice of calculating predictable patterns and how the market moved and worked. These computer-driven investors couldn't care less about a company's fundamentals, amorphous qualities such as the morale of its employees or the cut of its chief executive's jib. That was for the dinosaurs of Wall Street, the Warren Buffetts and Peter Lynches of the world, investors who focused on factors such as what a company actually made and whether it made it well. Quants were agnostic on such matters, devoting themselves instead to predicting whether a company's stock would move up or down based on a dizzying array of numerical variables, such as how cheap it was relative to the rest of the market, how quickly the stock had risen or declined, or a combination of the two, and much more. The next billionaire Muller spotted was Ken Griffin, the blue-eyed, notoriously ruthless manager of Chicago's Citadel Investment Group, one of the largest and most successful hedge funds in the business. Grave dancer of the hedge funds, Citadel was known for sweeping in on distressed companies and gobbling up the remains of the bloodied carcasses. But the core engines of his fund were computer-driven mathematical models that guided its every move. Griffin, who sported a no-nonsense buzz cut of jet-black hair, was the sort of man who triggered a dark sense of foreboding, even in close associates. Wouldn't want to mess with Ken in a dark alley. Does he ever smile? The guy wants to be king of everything he touches. Petey boy. Muller felt a jolt in his back. It was his old friend and poker pal, Cliff Asness, manager of AQR Capital Management, among the first pure quant hedge funds. Asness, like Muller, Griffin, and Simons, was a pioneer among the quants, having started out at Goldman Sachs in the early 1990s. Decided to grace us tonight? He said. Asness knew Muller wouldn't miss this quant poker coronation for the world. Muller was obsessed with poker, had been for years. He'd recently roped Asness into a private high-stakes poker game played with several other traders and hedge fund hotshots in ritzy Manhattan hotel rooms. The game had a $10,000 buy-in, couch cushion change to top-flight traders such as Asness and Muller. The real point of Asness's needle was that he never knew when the globe-trotting Muller would be in town. One week he'd be trekking in Bhutan or whitewater rafting in Bolivia. The next, heli-skiing in the Grand Tetons or singing folk songs in a funky cabaret in Greenwich Village. Muller had even been spotted belting out Bob Dylan tunes in New York's subway system, his keyboard case sprinkled with coins from charitable commuters, with no idea the seemingly down-on-his-luck songster was worth hundreds of millions and flew around in a private jet. Asness, a stocky, balding man with a meaty face and impish blue eyes, wore khaki pants and a white tee peeking out from his open collar. He winked, stroking the orange-gray stubble of his trimmed beard. Though he lacked Muller's savoir-faire, Asness was far wealthier, manager of his own hedge fund and a rising power in the investment world. His firm, AQR, short for Applied Quantitative Research, was managing $25 billion and growing fast. Here comes Neil, Asness said, nodding toward Neil Chris. A quiet, cerebral mathematician with degrees from the University of Chicago and Harvard, Chris had cut his teeth on Wall Street at Morgan Stanley, where he'd met Muller. He was also a member of the Quants poker-playing inner circle. Seen Boaz? Chris asked, scanning the room. They looked for the fourth member of their private poker game, Boaz Weinstein. Just 33, Weinstein was head of all credit trading in the United States at Deutsche Bank, the German behemoth. A chess life master, he'd made vice president at Deutsche in 1999 at the tender age of 25. 2 years later, he was named a managing director of the firm, one of the youngest in the bank's history. He ran a wildly successful internal hedge fund at Deutsche that he planned to name Saba, Hebrew for wise grandfather, in honor of his own Saba. Over there, said Muller, pointing to Weinstein.
Sample complete. Ready to continue?